Welcome to this week's Trading Bell. That marks the closing of the market today. I will be your market analyst for this week. Market indices, the All-Share Index and the NSE 20 and NSE 25 all gave a mixed reaction or a mixed performance over the last week. This is because the NSE 25 and the NSE 20 were down marginally, while the NSE All-Share Index was up marginally. However, the market remained pretty flat over the last week. We saw the NSE 20 share index closing at 3,519.78 points, which is only a 3.19 negative 3.19% drop, while the NSE all-share index was up 0.29% to close at 178.76, which was a slight or marginal gain. However, we did see during the week there was quite a bit of low volumes on the market, and this was really as investors were sitting back and waiting for the Q1 results to start coming in. And the good news is that the Q1 results began to trickle in. Last week, we did see CFC Stanbic Bank announce an 80% gain in their profits. We did see Equity Bank announce a 22% gain to 4.9 billion of PBT today. We also did see KCB announce a 5 billion profit for quarter one of 2018, which was a 14% increase. And we do expect that based on these results starting to trickle in, we will see a renewed market vigor, especially with investors now beginning to look to buy into these stocks, which have already seen their books closure happen. And so we did see a dip in their prices from highs of 55, where equity is now trading at around 49.75 to 50 shillings, and KCB also trading at around 50 shillings and 50 cents. We did see Safaricom also begin to pick up speed after having dropped to around 27 shillings and 75 cents, and today closed at 29 shillings. So week on week, we have seen Safaricom again recover after the announcement of results, in which we did see the company post some impressive results. And investors are now beginning to be more confident after a period of low interest in the market, which we expect will now begin to drive the market going forward. In terms of the market performance, we did see the usual suspects, Safaricom and KCB, on that board. Safaricom came in second, having gained a week-on-week 3.57% from 28 shillings to 29 shillings. Express Kenya, of course, came on top of the board with a 10% gain to 4 shillings and 95 cents from 4 shillings and 50 cents. And KCB came at the bottom of that, the top five, with a gain of 1.51%. However, we still see in this case the gains are not major, and this is also an indication of a market that has remained rather flat over the last few weeks. However, we still see that our indices are below where they started the year, and therefore we do expect that now that Q1 results have started to come in, we are going to start to see more activity and more investors wanting to come on board onto the market, and therefore we do foresee a bit of a rally going forward. On the losers board, Athi River Mining continued to suffer. We saw it go down from 6 shillings and 5 cents to 4.95, which is about 18% drop. 14% on National Bank of Kenya, 14.6, going to 6 shillings and 40 cents from 7 shillings and 50 cents. So again, we do see that the blue chips have done well over the last week, and this is a good sign for the market, and we do hope that this is going to be a sign of another rally on the market as we see investors begin to take positions so that they can at least be in a position, if the rally happens, to take profits going forward. That is it for this week, and let us now go into our Market 101, where we discuss or we talk about terms that we use in the market. That's Market 101. And now let's go to the street and listen to our question for this week.
My name is Harun Madena from Kilifi County. We would like to know what is dividend drought. Thank you.
Thank you, Harold, for your question. And the dividend drought you're asking about is occasions when companies take a long period without paying their investors dividends. It does not mean that these companies are not making profit. For example, Centum had a 9-year dividend drought, which ended in 2016 because as an investment company, they felt that their profits were better off being reinvested. But once they reached a point where they felt that they needed to start paying dividends again, then they ended the dividend drought. Everready, for example, last year ended the dividend drought after 10 years, after they sold one of their major assets for 1.1 billion, and they were back in profit. So a dividend drought is a prolonged period in which a company does not pay their investors dividends. It may be because they want to reinvest their profits, or they are undergoing a period of losses in which they don't have enough to pay a dividend. And now, let's look at the NSE historical facts.